Yeah, welcome. As I get started, if anybody could give me some feedback, that'd be marvelous. Oh, there we go. Cool. Thanks, guys. All right, so everything's good. Cool. Welcome to the class Hanging Out with Bill and I here. I'm going to start today, and just so you know, neither Bill nor I are registered broker-dealers. It means that we do not give individualized trading advice or recommendations. Trading does have risk, so paper trade and use caution before moving into any real money positions. And I do not have any trading restrictions, and neither does Bill. And if Sydney should stop by, she doesn't either. Yes, Scott, your broker Sydney is actually still asleep for the day. So there you go. How's that? Living the life of leisure right there. Let's do this, shall we? Let's look at some things that may be moving. So I'll bring in, he signaled, yeah, don't have cookies ready just in case I need them, right? Let me show you. You notice Facebook? Let me get over to a different template that might be a little bit easier. Oh, and Netflix is looking pretty good too, all of a sudden. All right, so some things have been moving. Not too shabbily today. Shabbily? You like that word? That's right, Bill. It was chocolate chips last time for Sydney. Love it. Shabbily. I think that's it. I'm going with that word. So starting with the S&P. So we've got our markets that are pulling back, and you know why the markets are pulling back? Gene says he likes that word, especially since he has puts. I love it. So once again, it's oil. This time China, right? So it's either. It seems like lately the markets are either up or down based on oil. So I can't imagine overnight things change that much in that industry. However, we are seeing that create a lot of volatility. So the S&P, that had closed above the 20 exponential moving average right here for Thursday and Friday. Now today comes tumbling back down into the downtrend area. In fact, you'll notice right now as I'm talking, the S&P is testing a breakdown below a support level, isn't it? So we've got that. Netflix, before I move on to Facebook, you can also see Netflix is in a downtrending pattern. And what Netflix did this morning, this was an awesome pattern. It gapped up. In fact, if you guys listened to my Market Insight, did a recording a little bit late last night, but I talked about the possibility that some of these stocks that were a little more bearish, that with Google's earnings last night, that some of these stocks may, and it's just thinking through patterns that might happen. Sometimes stocks end up gapping up if you've got some good news out there. But if it's not good enough news to hold, you'll sometimes have a gap up near a, let's say, moving average resistance, and then the stocks may continue to tumble lower. So anyway, the gap up can end up becoming a bearish type of an entry. So kind of cool, but that is exactly the pattern that we ended up with on Netflix. So I would love to say I knew that was going to happen, but I just knew that it was a possibility, that I have seen it happen before in the past. So it's just something to be aware of, right? So let's do this. Let me try this. Let me switch over here in just a second. There we go. Sorry. There we go. I am back. It doesn't let me change my screen, but it looks like here we go. Perfect. Okay. So what I wanted to do was just kind of back things up and show you how this morning things kind of played out. So you can see the first 5-minute candle. Netflix was a nice gap up. Big bullish move on the first 5-minute candle. And a lot of volatility too, though. Long wick at the bottom, long wick at the top. But all in all, at the end of that 5 minutes, what you can see, if you look on the daily chart, you can tell that the daily chart Netflix came up awfully close to the 10 exponential moving average, and that closed there, the first 5-minute candle. So now, you guys know how I talk about trading. As far as early morning, a lot of times the way that I like to look at things is waiting for a breakout of that first 5-minute candle, because something like this, you can sometimes see Netflix move higher and retest the 10 moving average. You can see it go lower. It just gets, I just don't know, and I don't find that the first 5 minutes gives us a whole lot of clarity a lot of times. So I like the way it closed. I like that the 10 moving average on the daily chart is still holding as resistance, but the next candle, Netflix could just as easily make a run for that 10 moving average and break out. So I like to wait for some kind of a change and a breakout of that first 5-minute candle body, and it happened, and it started to happen on that second candle. It pushed higher, but that could not hold, and it failed. In fact, watch this. I'll do it this way. Hit the bar replay. And I'll just play it back minute by minute. It's kind of nice to see what happens. So you have the first minute candle, a little bit of a gap up, and then pulling back, okay, a little doji. Starts to shoot higher. Okay, so this is where if you did move into a bullish position, it has to be a day trade because you still have the 10 moving average on the daily chart that could be resistance. So if you purchase this, a call option as a day trade, your stop would be right below the top of the first 5-minute candle. Let's go for it again. Okay, there it is. So if you had moved into the call side, because theoretically here you could have, because it was 8 minutes in that it was pushing above the first 5-minute candle, but then you're stopped out right here. So it would have been a small losing trade. It wouldn't have been a big one, but a little loss for sure. You're out there. Then on the next candle right here, we have a breakdown below the first 5-minute candle body. That becomes a bearish entry. Well, let's see. Rose. Oh, nice. Rose said turned out to be $4,700 on a Netflix practice trade on puts, right? Paper trading this, that breakdown. So you see what happens. I can go minute by minute or maybe kind of see how it fluctuates. And well, volatility tries to push higher but cannot break above that upper band. Or maybe I go five minutes. It's going to take forever. Let me jump 5 minutes at a time. So you can see on that, even that retracement that we had, it popped up, could not stay above the upper band. There just briefly broke down again, and now we're dealing with another retracement. And I would be watching this saying, okay, could this be a potential falling three? So you have another place to buy put options if it becomes a falling three, which it did right there. So you've got entries here on the breakdown of that first 5-minute candle, so which was several candles in. Over here, another bearish entry in that 94 area. The earlier entry was around 95.50 or so. You can watch what happened with Netflix, just nice sell-off. And to me, these are the trades that are the ones that we want to focus on. You can see how, by the way, over here it retraced to the 10 moving average and sold off again. What makes these nice, another retracement to the 10 and then a sell-off, what makes these types of entries nice is that the daily chart is already bearish. It's not like we're trying to buy calls on a stock that's really bearish. I mean, in fact, look at the trade. The two trading signals that you had, one would have been bullish on that first breakout of the first 5-minute candle. You would have stopped out of that. The next signal, the next several trading signals would have been bearish, and that is more in line with what you see on the daily chart, right? Does that make sense to everybody? You certainly can make money buying call options in a stock that is in a downtrend. So Netflix in a downtrend, there absolutely are times you can make money buying calls. But I will say it is the harder part of the trade. When you have the overall tone of the market's bearish, the daily chart of the stock bearish, it becomes an easier way to trade when you're trading with that momentum. And so that's why a lot of times I strive to do that. And a lot of my teaching has to do with finding those patterns that we have this morning on Netflix, because they can be quite profitable. As in fact, as Rose said on that paper trade, well, pretty cool, right? It gives you an example of what types of things you can see, right? $4,700 on a practice trade on Netflix in this sell-off this morning. Very cool. So yeah, thanks for sharing that. Let's see. Julie said I was in Netflix from the day before. I managed to stick with it until the long wicks where it filled the gap. I wasn't sure what I was seeing. The wicks from yesterday or this morning or down here at the bottom on today's chart. Okay, so I think, and that actually, Mike is asking a question somewhat like this as well. Over here, the fifth candle in, or sixth candle maybe? Yeah. Would the long wick have stopped you out? So let's say you bought puts over here on this breakdown of the first 5-minute candle, or you held them from yesterday. Stock comes down, and it did fill the gap. So let me back this. Oh, hang on. Jump on. So it fills the gap. Okay, so Julie's saying, look, she held puts. Stock gaps up this morning, it sells up. And I love that you held through that. That absolutely makes sense. Comes down, and for 3 candles in a row, it is showing signs that it's filling the gap, and it is starting to bounce, right? So now let's talk your real world trading. You've got money on this trade. It's filling the gap. It's showing signs of bouncing. Would this be a place that you would feel maybe like you want to scale out of some of your position? Because it is showing some signs of strength. I don't think that's a bad thing. If you did not hold through the next couple candles, now if you did, then it becomes really clear and easy. But right here, at this point in time, it gets a little bit iffy, and there certainly are some bullish signs. So what I want you to ask yourself is, does this look like, if I didn't already have put options, does this look like a place I would want to buy puts? If your answer is no, then maybe sell your calls, or at least half of your calls. Sell them there. Now, the next candle, halfway in, as Mike said, there was that wick that did spike above not only the first candle body, but also above the upper band, just briefly. Now, if you are a trader that you're not real fast watching every minute, this isn't going to be a big deal. But if you're right there at your charts and you're watching that rally, that actually can be a big deal, and that is enough to stop you out. So the 2 questions here: if it tries to fill the gap and it shows signs of filling gaps, I don't have a problem if you are scaling out or even exiting your position here. I don't even mind if you sell here your first put trade. But what I also want you to do is be willing to recognize that, okay, it started to break down, it filled the gap, it's really looking pretty choppy at that point. Bearish on the gap fill, but support there. At this point, not super amazingly clear. Go forward the next candle. Okay, still a little choppy, a little more of a tight wedge pattern. Can you guys see this? Lower highs on the candle bodies. I know my lines don't stay here for long, but you can see the upper line. Kind of higher lows on the bottom of the candle bodies. So you got this consolidation area, right? Okay. Still a little choppy, trying to push down below the consolidation area. Now, this is the candle where it becomes a lot more clear to me, because we have a close. Now, the close is below the wicks, but it's a lower candle body close than we have seen in quite some time. Now, retracing, remember how I said potential falling 3? I love this right here, because if anything, if you had entered a trade and already stopped out, fine. If you still have some put positions going, that's still good, but you had to be willing to give it more wiggle room. And if you're not willing to give it more wiggle room, then you have to let this you have to get out and then look for re-entries. By more wiggle room, I'm talking about a couple of things. One, the reason for getting into the trade was really 2 things: the daily 10 moving average and then the 5-minute chart. Sometimes what I'll do is I'll put, if I have a higher risk tolerance and I really like the trend of the markets in the stock, I will use, as you guys know, either the 10-minute the 10 EMA on the daily chart as a stop. If you did that, you would not have been stopped out, you'd still be in. Or even the top of that first candle body, if you're on the put side of things, and basically say, look, I'm going to let this go for a while because I really like the way it looks on the daily chart. If you had done one of those things, you'd still be in the trade. If you were more actively trying to day trade this, there is a very good chance that you would have sold over here on the wicks that filled the gap, or that you would have even sold over here because it looked like a change just for 1 minute, but for that 1 minute, it did look quite bullish, right? And I don't have a problem with that. If you do that, I don't think you're reading the chart wrong at all. You recognize some signals. We don't know how high it's going to go, so you get out, protect your money if you're day trading. But then over here, something starts to materialize here that we didn't have quite before. We're seeing consolidation back down to the wicks, and now it's candle bodies closing at that area. And this potential falling 3 is really important, because the 10 moving average is holding as resistance. And to see what else is going on? We have long wicks at the top, right? Now we're seeing the opposite of what we had earlier over here. Long wicks at the top, 10 moving average holding is resistance, and on the retracement, the candle bodies are getting smaller and smaller. All it takes is a breakdown below the last bullish candle body, or as you guys know, this is another entry, and this is all from the trend trading DVDs when I talk about the rising and the falling three patterns. We've got another entry below the bearish candle body. Now then, at that point, you start to see entries here on these two candles. So even if you had gotten in and stopped out, you have a re-entry right there, by 94, really by, let's call it 94.20 to be real conservative. And then, by the way, here's another retracement to the 10, a bearish engulfing candle at 92.80, another place to get in and buy put options. And that would have allowed you, even if you'd stopped out earlier, and it could have been stopped out banking some profit, or it could have been stopping out at a small loss. You got in and out, managed the trade, kept your losses small, and then had another reentry that led to the nice trend. And so this is where we've seen kind of the bigger momentum push up, and that was again around 94.20, and it's now trading at 91.70. So hopefully this helps analyzing, and you got to know things aren't always going to be 100% perfect, because we get these nice patterns, but if you weren't willing to have a looser stop, and that's okay. It's not a bad thing. It depends on your account, your risk tolerance, how much you really want to leave at risk. If you don't want to have a lot of risk, there is a good possibility that you would be exiting here where Julie's talking about, or even up here where Mike is talking about, because otherwise your stop is close to another dollar away, right? And so that's not bad trading there as long as you recognize where things start to move. What I've found in the past, one of the mistakes that I made, especially early on, and still fight it today, honestly, is just where you get stopped out of a trade and we get frustrated, and so we may not want to trade it again. And so you miss some of these moves. Now, I don't want you to get stopped out of a trade and say, okay, I'm mad at Netflix, I'm making my money back on Netflix. I don't want you to have that as a goal and be bitter towards Netflix and fight it and try to make as much money as you can on that stock, because then you're going to overtrade and make stupid decisions, right? Not that I've ever done that before, but if you have a losing trade, it doesn't matter where you make that money back, right? We just want to make it back on the best pattern. So don't go after Netflix if you've already stopped out just because you want to make your money back on that stock, but go, keep it on your list and watch it, because there's a reason it's on your list. It's a downtrending chart. It looks good on the daily chart. If it still looks good on the daily chart, keep it on your list. If you have a nice tradable setup, like those that I lay out for you, whether it's the trend trading DVDs or in the trend setting trades class one in Phoenix, I was showing you these patterns. You wait for those patterns to appear. They tend to be the more reliable, consistent patterns at helping you find momentum. Things like the falling three that developed over here. Things like the bearish engulfing, right, on a retracement to the moving average. So we're watching for things like that to help you find new entries along the way. All right, let me catch up to the questions here. Yeah, Scott's saying it's possible falling three on the daily, as well as a bearish engulfing from yesterday to today. You're absolutely right. Look at the daily chart. It's in that developing falling three, and it's almost engulfed yesterday's candle body. So yeah, on both accounts, right now the daily chart is looking more bearish. Now at this point, is this the time to go in and buy put options right now? Probably not, right? Because we're seeing a Bollinger Band bottom. Now it's retracing to the 10. I like this, but the bands look different right here than they did, over here the last time the stock retraced to the 10 over there and there. They're different. It looks like it might be bottoming out. Plus, knowing that it is, 12:20 on the East Coast, things have a tendency to slow down around now. Now, Julie, let me see. You did, let's see. Sort of got out on the third candle down. Obviously would have been better to stand, but So Julie's viewing it as it's bouncing to fill the gap. I don't think it's bad that you got out at all. I think that's fine because it was starting to move higher and did find support. Unless you were willing to keep your stop near the 10 moving average on the daily chart, you would have gotten out there and then you look at re-entering if there is another entry, right? So yeah, I think that's actually good analysis of the chart. Yeah, Scott's saying, look, because it's off the lower band, maybe you'd be using your stop. If you had those puts, absolutely, your stop at the 10 moving average would be the place to go. And we're stopped out right about now, right? So getting a little bit scary. Thing two you can do, let me back this up. If you are, and this is if you're a day trader, right? So you're day trading, and you bought puts on one of these breakdowns, and you got profit. The stock's moved several dollars in your favor here. Stock's pushing up, down. It's a doji. It still looks good there. Does it look a little bit different right here? Can you guys see the difference right there on the right side of the chart? Yep, maybe. Yeah, we've got a longer wick at the bottom. It's a doji, but to me the most important thing is that lower band. There you go. Oops, I've got it. The lower band angling up a little bit. It starts to show us signs of a Bollinger Band bottom. Then this next candle almost becomes a bullish engulfing. Now you will notice, no, the entire candle body does not. It doesn't start below, right? It's not exactly engulfing, exactly. However, to me, the fact that it traded above that green, that small green doji, that says something. I treat that a lot of times like an engulfing candle. So let's say you recognize the Bollinger Band bottom. As Jordan says, the stock is not touching the lower band. That's a sign of a Bollinger Band bottom. If it moves higher and moves above the last candle body, that's a sign that the retracement basically, I mean, it may be over. That sell-off may be over, and the stock is not going down any longer. If it's not going down any longer, we know it's not going to touch the lower band. That green candle right there could actually be a day trading exit, getting you out right around that 91.60, or let's even call it 91.70, right, to be real conservative up here. Once it becomes bullish engulfing of sorts, that is a day trading exit. That's one place to get out. Another place would be at that 10 exponential moving average, because that 10 has been resistance through the morning. We're already seeing signs of that Bollinger Band bottom, and if the stock pushes above the 10, like it did there, that would be a place to get out, just as a protective measure, because we know that stocks may be doing what now? They may be moving into a Bollinger Band pinch, right? Yeah, we might be seeing something like that, and if they go into a pinch, then we're going to have a period of slowness. And unless you want to hold your put options that were meant to be a day trade, unless you want to hold those through the next hour or two where we expect that things are going to be sideways, you may be better off just selling. And this is, again, if you intended this to be a day trade, it may make more sense to get out as close to the Bollinger bottom as possible, and then keep Netflix on your chart and watch for the next entry. It might be a breakdown. It might be another a bearish breakdown, a big, strong bearish engulfing candle with long volume. It might be a Bollinger Band pinch that happens a little bit later. All right, and George's bringing up the Keltners. Yeah, that Netflix is moving back into the Keltner. Okay. Julie's asking, when that last one candle that closed near the 10 or pulled back? Let's see. We're talking back here on this candle? No. Let's see where it is. Okay, so it's got to be, so it's either this one? Okay, would this be the same? So you're talking about the engulfing, okay? Would it be used as an exit, basically? So we see that Netflix is pushing down, and it starts throwing the dojis. Where that looks a little bit retracement-like is that the candle bodies are getting small. Now the lower band is still angling down, so this, it's a smaller, less compelling version of the pattern that happened to the right. So I absolutely see what you're saying, and you're right in analyzing it that way, because you see the smaller dojis, It's not touching the lower band, and it's trying to push lower, but it isn't quite touching the lower band. It's trying. Bullish engulfing. As a day trader, I don't have a problem if you get out there at all, because this is where, remember on a Bollinger Band bottom, sometimes it takes there are a couple of iterations here where it pushes and then it, before it often completely reverses. So a lot of times they'll call it a Bollinger Band double bottom. So you've got that, pushes lower again, but see the difference over here? Just see how much sharper that upswing on the lower band is? So you start to see the beginnings of it here, the beginnings of that Bollinger bottom there. And if you want to tighten your stop around those dojis, I think that is fine. You're moving your stop around that 91, 92, 91 and change area. You're basically seeing that it's pulling away from the lower band. It's not a strong reversal, but it does tell you right there that things are slowing down. Basically, the stock retraces to the 10, makes one more push lower, but now you can see that it's an even stronger, more clear sign that the momentum is slowing, because at this point, the lower band is also starting to angle higher. So it's a little bit stronger. We're a little bit further into the pattern. But if you can recognize it earlier on, I am fine with that. And what that means is if you get out and the stock starts pushing lower again, it's hard to get back into that trade, because now we've already seen that the downtrend is weakening. So this part, to say that, yeah, get out and re-enter, that re-entry gets a lot more difficult, I think, because we already have signs that the bearish momentum is kind of drying out a little bit and slowing down. So be a little bit careful on that entry here, because if you sold and then re-entered here, you'd have just a little bit of movement in your favor, and then you're getting out. Probably wouldn't have made much money on that part of the trade, right? So it's sometimes a process where these things turn. But yeah, really good question. So hopefully that helps clarify some things for you guys. Let's see here. Let's see, Philip, is Netflix in day trade range until it breaks below $90? It took, let's see, I'm not sure, you said it took 3 times over 3 days. Is it in a day trade range? I mean, you could trade it, you could day trade it any day. It's volatile enough to do that, but we do have the 10 moving average as the resistance, so it's also a trending candidate as well because of how it's looking on the daily chart. So I'm not sure. Let me know if I'm not answering correctly. Oh, you know what? Sydney just woke up. All right, so I see you guys have got some great other questions, and I do want to look at Google because they announced earnings. Let's see. Tom, real quick, Tom's asking, do you have thoughts or actions outlining my account growth when I took it from $2,000 to $2 million, you mean? Selling me short at $1 million. Sheesh. It's the patterns I showed you here are exactly what I did then, and to learn about exactly what I was doing. I mean, just keep coming to these classes, Trader's Talks, Trend Trading My Way DVDs, and the newest class, the Trend Setting Trades. I talk about all that in there. Yeah, and you guys, I'm sorry, would you mind? Would you mind so much if I hang on just for a minute? Bill's going to come in and join us in a few minutes. But little Sydney woke up and she's stuck in her crib. I was hoping she'd sleep until the end of class. So do you mind if I bring her in here and she'll come hang out with us? Hopefully she'll behave. But if you'll give me just a quick moment, I'll come back and we'll look at Google. Okay, maybe Facebook too. All right? Thanks, you guys. I'll be right back. This took a little longer than you think. All right, so here we are. Want to say hi to everyone? Can you say it loud so they can hear? My everyone. There you go. All right, so she said she wanted to work with me. So she's working with me. Okay. Thank you, guys. I appreciate it. Yeah, Mike said, meant to ask, is Sydney's middle name Greatness? Yes. Yes, how did you know? All right, so where were we? We looked at Netflix, and see, notice how with Netflix, it's still in the pinch, right? So it's pushed higher, um, made it above the 20 moving average, and it's retracing. But you'll notice how tight the bands are coming together. So this becomes a good Bollinger Band squeeze play potential for this afternoon, maybe. All right. There we go. Hey, Thomas. Good to see you here. Oh, yeah, no problem. Working through Netflix. Should we look at, Scott's asking, is it the fade into lunch? So the fade into lunch part, a lot of times it happens earlier, but the fade into lunch trade here would be once you recognize the Bollinger Band bottom. So right in this area, the upper band's curving higher. That next candle at the same point that you're stopping out of puts on that downtrend, this would be a place that you can reverse your trade and buy calls. And so it would be that bullish move here, up around 91.80, then it moves up again. And honestly, this trade sometimes goes all the way up to the upper band. So you'd be using that as your target, but you also know if you end up with a bearish engulfing, you've got to jump out. So right in this area, pretty much you would be out of that trade. So your day trade on the fade into lunch, as I mentioned, started a little bit later than usual. Usually you see that in the first, I don't know, it varies. It could be in the first hour or so up to the first couple hours. This is just a kind of a later version of it. But happening right here, buying calls, and then probably getting out here really quickly. If this ends up bearish engulfing at all, from here, you're out. So you're talking maybe close to $1 movement there. So anyway, just something to think about. Yeah, I know. Dean's like, this is weird. You're talking day trades. I was talking trading trades. But if you're a trading trade, not a lot to talk about on Netflix. If you're in a trending trade, we had an entry today. And you're still in because of the way that it looks on the daily chart. So you're in and you're just holding through all this, and you don't micromanage this stuff, right? Okay, Philip said so on Netflix, on the daily chart, this is the first day of the downswing. So if you're using the day count, this would be considered day one of the move, because it's the first day that it's pulling back away from the 10 moving average. And a lot of times we will see stocks move 3, 4, 5 days. Look at the daily chart over here. We had 1, 2, 3, 4, 5, 6 days last time before it retraced. Okay. Let me catch up to the questions here. So yeah, Ken's asking, what do we do with spreads? Some of the spreads are wider these days on some of the stocks. So market makers are much better than they used to be at filling in the spread. So that's one thing. You can always try to place a limit order in the spread. And then if they don't fill you, then pass on it. You've got to kind of decide where how much risk you're willing to take. So the big spreads aren't that big of a deal unless you get stopped out of a trade right away. And then that's where they hurt you, right? If a stock is, let's say Netflix, where it's trended down for a few points today, even if you enter the trade and it has a wider spread, it's not that big of a deal because you can overcome that spread with, several dollars of movement. But if the spreads are, or let's say if the spreads are wide and you get in and then you stop out right away, you're going to take your biggest loss right there. So you have to ask yourself if this is a risk you're willing to take, and you do things by stacking the deck in your favor, making sure that the stocks you're trading are moving with the markets, making sure they're in a trend on the daily chart. You have a higher probability of success on things like that. All right. Hey, Kathy, it's good to see you here. I'm glad you're back. Yes, I would love it. She says, hope to see you somewhere warm this year. I would love it. That would be awesome. Okay, so I've got, very cool. Jeff's bringing up Boeing. So a few stocks I want to show you. I'll show you Boeing and Google. We'll look at all those real quickly, though. Boeing was one that was awesome, and I wanted to talk about this today, so I'm glad you brought it up, Jeff. He said on Friday he bought to open a Boeing put, what was at the top of the falling three. Oh, so okay, got it. So you got in over here Friday when it pops up there, right? Okay. So yeah, so he's like, what about my entry? So we got in, it pops up to the top of this falling three, in the gap down area, a lot of times that will hold as resistance. In fact, if you look at my extreme charts on Boeing, I had drawn a rectangle around that area, and I basically said, look, if it drops back down below the top of that rectangle, I was looking at puts the next day, right? If it broke down there, looking at put options the next day. If it rallied and stayed above the rectangle, I was thinking maybe we'd see it right up to the 10 moving average and maybe get a partial gap fill. So where you got in, I don't think it was bad. It's just a little bit early in that we don't see, there's not a long wick at the top. There's, at the end of the day, Boeing closing near the highs of the day. A lot of times those stocks will keep moving up the next day. In fact, that's a strategy, an overnight strategy that can work. I used to use it in a strong trending market, and it's something you guys may want to just jot down and keep this in mind. So this was something I did a lot in the 90s in the tech bubble. So if a stock was in a strong uptrend and it closed near the highs of that day, within the last 5 minutes, I would go in and buy 10 contracts of call options and just one strike price in the money, call option, and usually the next morning, those stocks that closed near the highs of the day before would have a really strong open and an upswing. So the overnight trade was to buy options on stocks that were closing like Boeing. You see how Boeing that day had a really strong close, and you buy calls, and then the next day you would sell them pretty early in the morning, within the first half hour. So it doesn't work as well when stocks, when there's not as much momentum in the markets, but it makes me nervous to go in and buy puts on a stock this day, but the next day was a little bit better, because the next day, Boeing, although it had moved up, it also left a wick at the top. So we already see signs that it was pulling back. So it had this strong upswing, but it started pulling back already off of the highs. And so that becomes more of a tradable bearish entry. And then if you had done that yesterday, obviously this morning you're loving life, because that gap in your favor was great. This also, because of yesterday's close, was a nice bearish candidate for today. But let me show you the 5-minute at the open here. So it was a bearish candidate for today, but with such a big gap down and not a lot of follow through right away, it's a little bit harder to do much on this morning. But yesterday, if you'd caught that trade, it could have been a really nice day trade, and I'll tell you where, or that overnight. Not day trade at all, but that overnight kind of breakout entry. Breakout, what I'm trying to say, the failure. So the stock moving, pushing up to new highs. Let me just back this up. I'll walk you through the chart. Because here's what's happening. Boeing's pushing up in this gorgeous squeeze play that it had, breaking out above 120. It's pushing higher, higher, higher. And just even watch this as I go forward, and you can see where things start to change, right? Pushing up, even on these rallies, it's trading higher, but it's not trading above the upper band like it did over here. So still bullish, looking good. In fact, at this point, you'd probably want to use, if you're using a moving average to help with this, you guys tell me. But would it make sense to change this out to a 5? Now we have a doji, and the stock never touched the upper band. This bearish pullback, this to me starts to confirm that we have a Bollinger Band top. So even though the stock pushed higher, it could not touch the upper band, and now it's trading below the doji. That to me is an exit if you had calls. If you traded that day trade retracement on Boeing, because now we're over here on the daily chart. At the end of the day, it's traded up up 3 days in a row, and it's in a downtrending pattern. How many days, let's bring in the day count, how many days do stocks usually retrace? It's 1, 2, or 3 days typically, right? So we're 3 days into the retracement. Stock is trading near the 10 moving average. We start to see a Bollinger Band top here. The stock is pulling off the highs of the day. So you've got an exit for your call position. You can see how sideways it's moving. That bearish engulfing candle right there, completing a falling 3, that's a place. If you wanted to buy put options, you've now got a sign on the daily chart that it's leaving a wick at the top. You're really close to the end of the day. You've got 10 more minutes to go. The 10 moving average on the daily chart is still resistance. It's traded up close to the 10. All of these places are places where you could get in and buy puts yesterday, and then you're loving life overnight here. And when it gaps down, if you're in something like this, when it gaps down in your favor, you can use the top of that gap down area as your stop. You should be in for a little more of this bearish momentum that we've had today. So I like your entry where you're trying to get in ahead of the falling 3. It was just a little bit too early. It was before we had that confirmation that things were reversing. In fact, let me back it up now. So this was yesterday's candle. I wanted to just look at Friday's intraday chart when it came up to the top of the falling 3, and it wasn't horrible. It wasn't horrible. It did have long periods of just choppiness. It almost seemed like it was either pushing higher or going sideways. So, it's one of those things. It's a nice try. It was a little bit early, but sometimes they'll work out nicely. So I think you're okay as long as you have a tight stop. So sounds like you traded it right for what it was. Just one day early. And this is again why I like that when we get close to those averages. I think they can be really helpful. Let's see, on Boeing, would you typically close the position on the doji or the first red candle? Which we're talking on the 5-minute chart. If we bought puts yesterday into today? Or if we bought calls on the squeeze play. So if you buy calls here on the squeeze play where the stock is trending up, is that the part you're talking about? Okay. So yeah, where you have exits, honestly, a lot of times when you've got a stock in a squeeze play, if you can use the moving average, use the moving average. And what happened with Boeing is it started trending around the 5 exponential moving average. So you're using the 5 likely as your stop, or something like when you start to see that developing Bollinger top right there with the doji, you're using the 5 or that bearish engulfing type candle there. All right, hey Gina, aloha. What would you say the minimum daily range should be for day trades? As far as if you're looking at like the average true range, it's funny. Boeing, right now it's got an average true range of 391. That's plenty. To me, it's not as much about the average true range. It is a little bit, but it's also about the spread on the options. So, for instance, on Apple, average true range of $3. You can see it up here in the upper left. Average true range of $3. It's a decent amount of movement, and their spreads are teeny. Or you could have a stock with an average true range of $3 and the spreads may be 60 cents wide. That may be difficult. But Apple, $3 average true range and your spreads are pennies. That's something that you could easily overcome the spread and have some movement there. So is there average true range in these signal? Probably. I'm sure you could add that in. I honestly haven't tried, but I'll work on that. Let's see, Deborah's asking, so generally would not be getting out of the doji rather than using. So when you use the doji, there's got to be a reason for that doji, meaning that it's starting to show a Bollinger Band top or a Bollinger Band bottom, or the stock has moved beyond where it normally moves. Otherwise, a lot of times you're going with the moving average. Thanks. Scott says it is in there. So I don't know if you put it in there, your list of stocks in that chart watch, or if you can actually put it on the chart. Resignal is pretty flexible. You could, I would be surprised if you could do both. Thanks, Scott. All right, now another thing I know I was going to show you guys. Google. So they announced earnings last night, as you all know, and they had a decent gap up, shall we call it. And, you know, this one, if you're trading post-earnings, it's a day trade. So a couple ways to trade this right here. Let me zoom in. Let me just do the job, but I can play it back minute by minute. Okay, so here's the first 5-minute candle. Next minute, gap down, pushing higher. There you go. Right in this area, it's pushing below the first 5-minute candle. This is a place to buy put options for what may become a fill of the gap, right? And as we know, sometimes stocks fill the gap and sometimes they don't. Oh, shoot. I just hit the rock. Hang on, now I've got to do this again. Okay, so if the stock is pushing below the first 5-minute candle, however, there's often a chance that it is working its way to fill the gap. And even if it doesn't fill the gap entirely, it may come back to you know, an area of like the upper band or maybe the moving average. So you do have this tendency to see some bit of a, you know, some bearishness. So that is a place to buy put options right there, 795.75. It pushes lower, things are looking good, and you've got to just kind of target maybe a gap fill. The problem is right there, it's already bouncing, and by that first candle, this is the first minute of the third candle of the day, and it's already got a little bit of a tweezer bottom. So if it goes up any higher, that is a place that you probably want to sell your put options, and that second candle in, it's moving higher, so you're out. I mean, so you're looking at a trade of, what did I say the entry was? Jump up here. There's a couple candles in. This is right in this area, 795.75 or so. Let's, you know, somewhere above, below 796. A little bit, 795 to 796, and then you're out here by around 793. So even though it doesn't look like much, you could have had some profit in that as a really fast day trade. But it gets harder. Right? And then once that 5-minute candle is done, it turns bullish engulfing. You also could consider buying calls on a bounce because now you're seeing signs, well, it closed as a bullish engulfing, and it's not yet, but let's see. Does it move higher? There it does. Now it moves higher, and you could look at a bullish day trade. But then on that side, you got to run, you're worried that the opening candle could end up holding as resistance. And so it's just a matter of walking forward, just using real tight stops. I'll switch this back to a 5-minute playback. So if you did move into the call side, it traces to the 10, and I mean right here, you're probably looking for an exit because it's just not moving very fast. So that bearish engulfing, you're out. Everyone singing to us. So anyway, a couple thoughts there on Google. Some of these post-earnings trades, there isn't as much room in some of these as we see in some other trades. It just gets, some of them get pretty choppy. Let me take this replay off. One thing you'll notice, I just wanted to show you the squeeze play that Google moved in. They started trading slow enough that the bands moved into that pinch. And in fact, it gave us a classic failed squeeze play breakout. It tried to break out here, and then it failed. And the stock did what it often does in a failed breakout, as it pushes to the opposite band. This part of the trading had a lot more momentum to it. Just this bearish sell-up that we've had here. I'll zoom out. Another thing, too, you got to remember when you're trading post-earnings, If the stock has gapped, especially like Google, are you trying to sing louder than I'm talking? I think she's trying to drown me out. If the stock has just announced earnings and they have a big gap, notice how big the bands are. So as I zoom in and get the bands off the screen, get rid of that gap area, the price chart, it looks a lot more significant, doesn't it? So that's what we need to do. Zoom in in fact, sometimes when gaps are really big, I will actually look at a chart without the Bollinger Bands. Because if the gap is too big, your computer is leaving blank space to accommodate those bands when you don't really need it there. She is a contrarian, Mike, isn't she? Do you want to say hi to everybody again? You want to sing a song? I think last time she sang the little monkeys. She sang one little mommy jumping on the bed. Let's see. Okay. All right. I don't know if you can hear her, but anyway, there we go. She sings all the time and says little rhymes. Okay. Jim says I'm killing it on her Nestle trade from last week. I love it. Okay. Let's see. Do I have any questions here? Let's see. Joan, E signal equals average true range. ATR. Yeah, they just have the ATR in there. Okay. I want to make sure I'm not missing any questions. And you know what? I'm going to check with Bill. He was going to join us, but maybe he won't. Let's see. Oh, you are here. Bill's here. He is here. All right, so hang on. Rather than listening to Sydney, since I've shown you the Google post earnings, we've looked at Netflix, Boeing. Oh, Facebook was one last one. Here we go. I'll leave you with Facebook. And this amazing monster momentum since earnings. And you'll notice now they're starting to slow down after how many days? Check this out. 4 days of upward momentum. Day count. Stocks tend to move 3, 4, or 5 days. So watch the day count and watch Facebook. All right, with that, I'll let Bill pop in and say hi for our last 2 minutes, 1 minute and a half. How's that? And Sadie, you want to say bye, everybody? Say bye-bye. Bye. Say it loud. Bye. Say, here's Boo. Yes, Boo. She still calls Bill Boo. In fact, she picked up the phone last night and called Boo late just to say hi. All right, so here you go, Bill. Thank you. See you guys.
Okay, that was awesome. So yes, Sydney did call me last night, picked up the phone apparently, and now knows how to operate the phone. So if that doesn't freak you out, if you've got kids, right, I mean, they just are born with this technology, it's amazing. I appreciate you guys coming in, spending a little bit of time with us, right? Good opportunity. Was watching there on the computer as Markay was teaching some stuff. It's kind of interesting. I was on a conference call with some folks, business call. I had to take that call. Wasn't another time that we could do it, so took the call, called Markay, asked her if she could, teach here with you guys, and then I'd be right in. Well, the call went a little bit long. While I'm watching what she's teaching, I can almost tell you what she was telling you just off of watching the charts, right? So some really cool opportunities here in this market, guys. Some of them short-term opportunities, some of them slightly longer-term opportunities. We had a great opportunity this morning to go in and dissect just a phenomenal day trade that occurred last week on Friday, and it was on Priceline. So those of you that were in class this morning with me in the morning lab, we talked about this trade. It was a great setup, really some nice opportunities, and it was this trade right in here, right? This let's just do it right here. Nice Bollinger Band breakout, squeeze play, and the stock moving pretty much, well, let's just point it out here, an entry right in here at about 1040 with an exit around 1068 gave you about $28 worth of movement, and actually an opportunity for a little earlier exit there. So really had a nice opportunity there on that. We had some great opportunities yesterday as well. Maybe not as big a move, but another nice day trade on Priceline. So guys, if you'll just apply the stuff that Markay's teaching here and use this stuff, I mean, a nice entry on the Bollinger Band squeeze play here, let's just call it even a little bit of a late entry at 1075, using the 10 moving average as your exit, got you out at 1090. It's 15 points of movement. And, you know, people will tell me, well, Bill, I can't afford to trade Priceline. Guys, right here, this was a Friday entry. So you're getting in late in the afternoon with very inexpensive options that have virtually no time value in them. You're buying all intrinsic value. Those options were trading right around $6. $6.50 was the average price at the Denver event. We did this as paper trade, and it caught, you know, $25, $26 worth of movement there. Okay, I love that. So Dean says, I'm day trading Priceline with $10,000 account, thanks to you. So guys, that's the kind of stuff that's out there and is available, but you got to learn to read the charts, right? You can't. Here's what I'm going to tell you. If you find reasons you can't, you'll always find reasons you can't. If you start finding reasons that you can, you will be amazed at the results. And so really some interesting activity going on in the stock. Nice bearish or bullish engulfing candlestick on a bearish trend here on increasing volume. Good reason to get out of some positions here. So you can see right here, this two candlestick pattern on increasing volume following a nice downtrend. That was a nice exit opportunity, confirmed it on a break of the 10 moving average. So some interesting opportunities here to trade some very pricey stocks, and we do that regularly in the morning lab. Don't know if you guys know it or not, but we've got, did Markay tell you guys about Trader Super Summit at all? Did she tell you guys anything there? I'll find out if she let the cat out of the bag or not. No. Okay, then I'm not going to tell you either. Let me just do this. Keep your ear to the ground, because here this week you're going to be hearing some stuff about Trader Super Summit and the pricing, the opening pricing, right? So we're going to do the same thing we did last year. The price will go up the more you wait, right? The longer you wait, the more you got to pay. That's just the way it is. All right. Mike says, I'm already signed up. Rose says, is it in Vegas? No, Rose, this year we're going out to Orlando. All right, we've been to Vegas. Here was the thing. If we went to Vegas one more time, I mean, I don't know if I could handle another 4 days with no sleep. Okay, so we did Orlando. All right, Jose says, I'm already in, signed up last year. So those of you that are not signed up, keep your ear to the ground. You'll be seeing something. And let me just, from that perspective, how many of you guys saw what is coming out or came out in your email and on the BetterTrades website? Anybody see what Rose says? Yeah, you checking your emails? Okay. Ken says briefly. All right. How briefly, right? I mean, are you guys, no, let me put it this way. If y'all are not checking your BetterTrades website and your emails, yes, there you go. Jim says the flash sale. Jeff says, you may have Melissa confirm BetterTrades has big enough room block for students because we tried yesterday until they're sold out, something's off, Tammy's still going. Yeah, no, we're working on that as we speak, Jeff, and I appreciate you letting me know because we do need to address that with them. You guys can see that I'm on tech support here with Gregory. Okay, did you guys know that? Okay. So as this thing comes around one more time, you're going to see here, guys, on the BetterTrades homepage, look at this, flash sale. Ends Thursday at noon. That's all I'm going to tell you. Boom, that's gone. You don't get to see any more of that. Now you got to go check it out. All right, that's the stuff that we got going on right now. Go check it out through Thursday at noon, right? So that's coming up. All right, good stuff. I want to take just a minute here and show you guys one that we have been doing for a couple of weeks now. And by a couple of weeks, what I mean is we went in, bought a position, and have been making money off of it for a couple of weeks. And that is going to be on the McDonald's trade that we did here. Some of you may be aware of this. We set up a calendar spread on McDonald's. And for the last 2 weeks, really last week on Friday and now this week, we have started to sell premium in the front week against our McDonald's long position. Okay, so what do I mean by that? Well, just as an example, let me draw it out. I know I've only got a few minutes here with you guys, but are you guys all right if I draw some stuff out? Does it make it easier to understand? Okay, this is the calendar cash flow strategy, the massive passive income that I've taught some of you, the DVDs that I did in Phoenix on this. We had a stock that was trading at about $123 a share. We looked at the chart, and when you look at the chart of McDonald's, what do you guys see in the daily chart? What is it that you're seeing in the daily chart? In fact, I think we talked about this. Did we not talk about this? Maybe it was last week here in class, right here in Unplugged. Thomas says, with a $10,000 account, can you trade Priceline using the 2.5% rule? Absolutely, Thomas. I mean, let's think about it for a minute. Last week on Friday, I could buy options on Priceline for $6.50. If I bought one contract, I've got $650 at risk. If I put a stop at $4, I've got $250 at risk. Okay, that $650 would have made you $2,800 of profit. It's not about what you can't do, it's about what you can do, right? Does that make sense? Learn to do those. All right, so yeah, it's trending up. That would be the thing on McDonald's, right? And did we do this last week? Let's see. Bill says it's kind of hugging the 10 moving average. It's actually right on the 5 moving average right now. So our reason for the entry here, guys, on this chart is several reasons. I'll point them out to you. One, we saw a stock that was breaking out above its post-earnings high. Okay, this red candlestick right here, that was earnings. So we didn't want to get in before earnings. We waited for after earnings. The stock gapped up, pulled back, and then rallied for 1, 2, 3 days, and then broke out right here. So this was our reason for getting in. I think we got in the the next day, around 122.50, and we went in and we bought a one strike out of the money option with 6 months of time. Now here I don't have the time really to go through with you guys all of the criteria that we use to determine if this is a calendar spread that we want to get into. But let me just kind of go through with you guys and show you what it was that we did. We went out and we bought the June options at the 125 strike price. Now let me ask you this: stocks trading 122, 123. If we buy to open the June 2016 125 call option, and I don't remember exactly what we paid, but let's just say that it was somewhere around $4. Right? If we buy that option, will we potentially make money if the stock goes up? Now, over the next 6 months, could we potentially make some money if the stock goes up? I'll give you all a minute to think about it. Yes, we would make money on it, right? And we looked at this as kind of a retirement account type of a trade. We went in and we bought 50 contracts, okay? So we're making a fairly sizable investment in our paper trading account, and that's okay because it's a paper trading account, which is the whole reason that we do that. So we're going to go in, we're going to do 50 contracts, and ultimately we're looking for a place to add to them, so I may add another 50 contracts. So that would be $20,000 that we put in here. Everybody with me? Okay. On Friday, the stock has rallied for several days. In fact, if we go look at the chart, you can see that last week on Friday, the chart of McDonald's looked like this right here. Right? So it was on this day right here, and on Friday we've been up for 1, 2, 3, 4 days. We rallied right up to 124 and change, and then started to pull back on the intraday chart. Well, on Friday, when are the options going to expire? Right? When are the weekly options going to expire? That day, right? I mean, they're going to expire on Friday. So we went in and sold to open the 125 call option, and guys, we were able to bring in, if memory serves correctly, and if you were at the Denver event, Kathy, you were there. What do you remember what we brought in? I don't remember if it was, yeah, I think it was 11 cents, I think is what we brought in. Okay, so we're trading on Friday, 9, 10, 11 cents. Let's call it 10, just make it a nice round number there. Some people say 9 cents, some people say 11 cents. So we'll call it 10 cents just to make it a nice round number. We brought in 10 cents by selling a call option on a stock that the options were going to expire that day. The stock had gotten up to about 124.28, and then it started to give us one of those intraday patterns that Markay just finished teaching you. And I'm going to guess, just from what I saw in the charts, what she was teaching you was perhaps a Bollinger Band bottoming pattern. Okay, and she probably mentioned something like a bullish engulfing. Well, the opposite can be found on the upside. So we waited for see that? I was on a call with another company and watching on my computer screen and could tell what she was teaching just without the sound. All right, I mean, that's how many times I've seen this stuff. We did this on, all right, if you guys aren't going to laugh, I'll laugh for you. All right, I'm going to crack up at my own stuff because that's how I roll. We did this on 50 contracts. All right, so how much did we bring in on Friday for a trade? And Kathy, y'all were there. You guys practice traded this. How did we bring? About $500. I think we actually brought in like $450 or something. That's $500 that we got paid on Friday for doing nothing, just waiting around. So we're making $500 for sending. Now, anybody hear about these folks who are running around wanting to have a $15 an hour minimum wage regardless of what it is that they do? Anybody hear about some of that? Okay, no one? Anybody ever heard of Bernie Sanders? In my dad's day, right, when my dad was a young man, Bernie Sanders would have been hauled in front of McCarthy and hauled off to jail. All right, so now we we call him a presidential candidate. That's where we've come to. So you got folks who are wanting, okay, so let's figure this out. At $15 a day, I'm going to have to do some math, so I'm breaking out my calculator because some of you know how I am. 8 hours a day. At $15 a day, $15 an hour, 8 hours, they're making about $120, okay, in a day. That's what $15 an hour gets you. Oh, well, now you're in a higher tax bracket, so by the way, you're not going to make the full 120. You probably walk out there with about 70 by the time you finish paying for the rain and the air that Bernie so graciously provides you. So $120 a day. Guys, we made $500 a day sitting on our butt looking at a chart. Which is better? Y'all tell me. Now, here's the thing. The person flipping burgers who wants $15 an hour has not invested the money to learn the skill, but the fact is that exactly why it's called an investment. If you invest the money to learn the skill, you get the return. In this case, we made $500 on Friday. Then we came in, so this contract went away, right? This contract disappeared on Friday. It was gone. We bought back our option for like a penny, whatever it was. And so we took this $500 and we stuck this $500 over in the bank. We'll put the bank over here. All right, there it is. Very true, Jeff. Jeff says burger flipper is a skill too, just not as profitable as trading. And perhaps some might argue not a $15 an hour skill. Okay, that's a skill you have when you're in high school and you're paying for gas. That's pretty much where that is. So now we've got a situation where now the next week has come around, right? And the stock this week traded up yesterday, but then started to pull back today, right at the open. Okay, so let's go take a look. You can see right here, stock traded all the way up to 124.80, and then started to pull back today. Well, we've got an entire week, basically. It's Tuesday, so we got the rest of the week. So here's what we did. We went out and we looked and we said, I wonder what the options are worth now, because let me do this first. When we look at this chart, does it look to any of you, off of what Markay so expertly teaches in her charting and analysis, like this stock may possibly be due for a retracement? Does anybody see some things here that make you indicate that, yeah, this stock may be due for a retracement? Anybody see some? Jose says it's been up for 5 days. The day count. All right. So it's been up for 5 days. We expect 1 to 3 days of retracement. Well, if I go in right now and I sell to open the 126 call option, okay, the 126 call option, I can sell that right now this minute. It looks like for 21 cents. Okay, the 21 cents. When I'm going to be able to sell that call option for it. So we go in and we sell that call option for 21 cents. Let's see what that looks like. We're going to sell. Now, this is this week's option now, right? So this is going to be week 1 of February. We're going to sell to open the 126. Holy cow, this one's further out of the money. I better move it up here. It's further out of the money. I'm selling the 126 call option. I'm doing it for 21 cents, and I'm doing that on 50 contracts. How much money am I bringing in? $210 per contract, $1,050 is what I'm bringing in to my account. Okay. Now, what did I have to do to get to 50? Mike says, is it unusual you'd sell one on Tuesday? No. And the only 2 days where I will not sell an option contract, the only 2 days where I absolutely, no matter what, won't sell one, Saturday and Sunday. Christine says, will Rob teach us this at the next step? He might if you ask it. Now, here's what I'm going to tell you, Christine. Good news, I've got a DVD set. I went through, taught this entire strategy. Here's the thing. Rob can teach you how to sell covered calls, but he probably does not use the day count. He might. Probably doesn't use the day count the way that I do, and I know that he does not qualify the options the way using the criteria that I do. But don't worry, I'm not hiding that information from you. Brand new DVD set just came out. Give us a call, and we'll give you a pre-release sale price on it. Okay? Rose says, but you got to buy it back by expiration Friday. Typically, yeah. I mean, you don't want to leave that out there for the overnight expiration risk, especially on the monthly option. I address that as well. Okay, the Phoenix Project. I like that, Mike. Wow, that was a pretty good name. We should have done that, Markay. We should have called that the Phoenix Project. That was where were you when we were starting this out, Mike? Why didn't you say something then? That'd have been. I like that. That's a good name. Phoenix Project. Sound like the top secret special operations Delta Force Super Master of the Universe class. Wow, I like it. Okay, Jose says this morning when we did it in the lab, it was 28 cents. I know. I wasn't going to tell them, Jose, though, because then they feel bad that they weren't in the lab. We got this for 28 cents this morning, so we actually made more than that. $1,000 came into the account this morning, guys. We put $1,050, you know, and it was more than that because we sold it at 28 cents. So close to $1,500 came in. So right here, $1,050 comes into our account. What direction does it look like when we look at the charts? When I just showed you the picture of the charts, you know, we've been up for, you know, 1, 2, 3, I think we had a doji in there, 3, 4, and then 5, and then today we have, you know, this, all right? So given that chart, what direction does it look most likely that this stock is going to move over the next 1 to 3 days? Okay, Jeff says down, Dennis says down, Bill says retrace, and I would agree with that. Do I really care if this stock moves down, sideways, or even if it was to move up? Do I really care as long as it does not go above 126? I don't care, because as long as it stays below 126, I get to keep the $1,050 that came into the bank account. And let me ask you this. Could I go in, buy back this option on Friday for, oh, I don't know, a nickel or a penny, whatever the case is, and then day trade, just like we did last Friday, and maybe bring in another $500? And as awesome as all of that is, as the stock over time does this, over time as the stock price goes up, what is happening to the value of the call option I bought? It's going up as well. Exactly correct, Dennis. So we've got an option that's going up in the long term and an option that's creating cash flow in the short term. And guys, this is stuff that we're doing. In fact, several people said, you know, Bill, we'd like to follow that trade pretty closely here in our paper trading account. So that's exactly what we're doing in the lab. Guys, this is a phenomenal strategy. I know I keep coming in here and teaching this one to you. You ought to learn it. It's pretty good. Okay, I mean, I'm not saying, I'm just saying. Tom says, I am joining the lab on Monday. First time, and I am psyched. Tom, I'm looking forward to having you in there, my friend. And guys, that goes for the rest of you. And I'm not saying, I'm just saying, you probably ought to take a look at that flash sale. All right, so there you go. Guys, that's what I got for you here today. Obviously, I have some more stuff. Looking at some really nice setups on some stuff. A minute ago, Dean sent me a text message, and he said, hey, we're putting in a new intraday low on Amazon. Okay, so we're getting some nice movement on some stocks. We're in some put options in Amazon from the lab. You know, we're looking at some stuff there. Beautiful breakdown on Facebook. I know Markay was talking about that with you guys, so take a look at that. Loving this all day long. Let's see. Philip says, what other stocks are on your post-earnings long-term trading list, like Nike, Starbucks, and so forth? So
Hey everyone, can you guys hear me okay? It's yeah, I thought it was just me and I had lost connection with Bill. Apparently Bill is gone. So his whole computer froze, he said. Ah, he's texting me. All right, so I'm not exactly sure. I know he cut off mid-sentence. So I don't know if there's anything I can help you with what he was saying. He did, I know this is all stuff that he taught in Phoenix. And I did, yeah, I love the Phoenix Project title. So we need you around helping us on our next titles. That is for sure. All right. Wait, there. Oh, Mike, I'm looking at the text chat. You said you got your DVDs on order, waiting patiently. Excellent. So yeah, they will be. I believe I'm going to be getting the first day sent to me tonight to just make sure it's good. So they're on track, and I think mine was targeted for Valentine's Day, so they will be there. Yeah, Victor, that's what Bill mentioned to me. Sydney's here eating waffles and butter. She likes the butter part better than the waffles, in case you're wondering. So she's got a spoonful of butter. Hang on, come say hi. You know, you're hearing the attitude. I don't want to say it. Bill and his internet. Hang on, 2 seconds. So as I was saying, Bill mentioned he'd had some issues. I don't know what's going on, but he is having tech support work with them, getting them fixed. Because I know he had a couple things with the lab. All right, now Sydney has her little blow toys too. All right, so I'm at my end with Sydney. She's getting wild and wants to talk too much to you guys. Let's see. Dennis said Bill's showing you post-earnings candidates for calendar spreads. Yeah, run through, I mean, in Dedicated Trader even, you've got that earnings calendar. We've talked about a lot of the companies that have recently announced earnings. Watch those. As far as Facebook, Google, of course, now. We've got a bunch of them. If you look at, let's see if I can change, take control. Here is my list. Apple post-earnings, Ambarella coming up. I'll run through my list with you. Amazon, obviously, they're done. Boeing, they are done. Chipotle, guess who announces tonight? Good old CMG. So this may be a fun one to watch for tomorrow for a, who knows, a day after earnings kind of a trade, possibly. Disney's coming up here in a little bit on the 9th. Facebook is, out of the way. It'll be nice to look for some kind of a post-earnings trending trade. We know Google, of course. Yahoo tonight as well, Scott. Absolutely. Yahoo will be a fun one to look for, see if anything's happening there. Even Goldman Sachs, who, did you notice today, they've continued their downtrend. They were in, if you listen to the Market Insight last night, they were in a moving average pinch, and they broke out of that pinch. All right. So, I mean, just a few, just to leave you with a list of stocks to look at for some of those strategies. LinkedIn is coming up in a couple of days. CDC, yes. Oh, they were cleared. The CMG was also cleared of E. coli by the CDC yesterday. I don't know what that means. Does that mean there will never be any more cases? I don't know. Still a little afraid to eat their lettuce. I'm just eating. You should have their carnitas quesadillas, by the way. Delicious. I'll just put it out there for you, your food tip of the day. As we know, Netflix is done. Priceline coming up on the 17th. Okay, just a minute. Can you tell everybody you want your gummy bear?
I want a gummy bear.
There you go. Tesla coming up. VMware is done, and they're in a more of a bearish trending pattern, might be a post-earnings trend. Walmart, of all things. I added these guys onto the list because I like their movement recently, and they're announcing on the 18th. So it might be worth checking those guys out. Okay, let's say goodbye. So you guys, thank you for joining us. Thank you for joining us. Thank you for your patience with little Miss Sydney. I appreciate it. Hope you guys all have a great trading afternoon. I will see you online tonight, hopefully in the Trader Stocks. And tomorrow night I'll be recording the Market Insight. Do watch. I know Bill alluded to something with TSS. We've got some neat things in the works, so watch for that. I think you guys are going to be really excited about it. I'm looking forward to it. It's in May, so we're already planning and just super cool things coming. All right. No, Dennis, I have not. Let me do a double check and check the spam filter. Make sure I got your email. All right, everyone, thank you again. Take care. There you go. I know it. The cholesterol and saturated fat and butter are essential to brain development of young children. Shaki says that, yes, that's exactly, yeah, there you go. That's why I don't mind so much. Maybe not so much for me, but for her, she can eat all the butter in the world. How's that? All right, you guys, thank you for joining us and hanging out, and again, being patient with Miss Sydney. I love it. I appreciate it. You guys take care, and I will see you online tonight. And Bill says goodbye as well. Sorry for the difficulties there, but he'll be back next Tuesday, and of course, you'll see him every morning in the lab. All right, thanks, everyone. Take care. I'll see you later.